What's up, traders? So, hey guys, we're doing an update here on OmiseGo, right? OMG, and I like to do a top-down. So top-down. Our model is based on a top-down directional. How we use treasury market. Doesn't matter what asset class you're trading. Doesn't matter if you're trading sectors within an overall asset category or country. You can still break down analysis on different markets the same way. So I like to start with the monthly chart down fractal basis, smaller. So like a lot of crypto, a lot of these coins, a lot of these projects are so new. You don't have a lot on the monthly. I would say that this is actually. Let me draw it this way. OMG here. You're not really trained to see cycles. Your eye isn't really trained to see this stuff. You won't. This is basically. This is a pretty clear cycle right here. It's kind of like a sine curve, right? Down cycle, up. Now we're on the back side of this monthly down cycle. Not enough data here for the stochastic to ribbon. But what is interesting is that we've been checking up. Price has kind of been holding about halfway. So I have a simple concept I teach my traders called um, wall concept, where we identify this bullish wall here, right? Here's the move up, pull back, right? So you want to treat this entire move as one giant candle, and then about halfway where you want to start accumulating. If you're always getting aggressive at the tops of the wall, you're late. You're gonna have a hard time working a position, right? Um, and there's a lot of reasons the wall works. It's just a probability and an edge thing. But all the energy it took the bulls, as soon as this coin comes online, a lot of price action here the first month of trading. But it settles into a base, takes out the prior, call it a swing line right here, and then uh, essentially builds this wall. So it's going to be very difficult for the bears and for the market to retrace and knock down this entire wall, guys. That's the idea. Pretty simple, but you can see these, once you start to see these walls, you can trade off of them over and over and over again. All right, so here we are in the weekly. You can start to see the cycles are trying to form. So we did cross here in January. Right, this is 1, 2, 3, 4 month correction that we're sitting through currently. You can see more of the same here on the weekly, that we like to focus on price and time. Time is the cyclical analysis. Price is obviously a lot to do with technical. Um, this is your swing line. Like I said, there's your base. This is what we call a real money candle in our model. It takes real money to create that. A lot of times that's ignites the move. It's also called an igniting bar, and that propelled this four-week rally, okay, into the highs. And then after a move like this, obviously this pullback has been pretty healthy. Let's look at it on the daily level. And here you can really start to see a nice rhythm, right? When we look at the cycles, much better. So we've been long OMG for a while, still holding a core position, and we really kind of signaled longs in here. Cycle started to turn back up. We look at the TMS, which is just a fancy way of saying looking at the lower highs and lower lows. When you're in a downtrend, you get lower highs and lower lows. When you're in an uptrend, higher highs and higher lows. So that makes up the technical market structure. So I call it TMS is the best way to view a trend. So once you understand that, you just have to know where to look for lower highs and lower lows. That can you can help again to accurately define where the trend has changed. Not using moving averages, that's all lagging. The MACD is lagging. You can use that stuff. I'm just telling you, the best way to define a trend is by the market structure. So that didn't change until right here. You tend to get these lower highs when you're in a downtrend, lower lows, lower highs, right? First sign that the market's maybe bottoming, my traders know this. This is a phase 2 higher low. These are higher lows. And then here's the breakout to new higher highs. Boom, right here. Right? And ever since, it's been higher highs, higher lows. Okay? See how that changes. Once you know what you're looking at, then you're going to be able to get the trend right. And then you just got to, and you focus on the cycles. And that's really what the main aspects of our analysis is price and trend, cycles and time. Then you get into things like, how am I going to work this position? Where's my risk? What are my setups I use to enter? How many times do I enter? How do I trail out of my position? Do I let the market take me out? Those are all the things we work on in our trading model process. And what we do in our trader coaching, when we trade live, we've got traders all over the world. I've been trading with traders, dozen to 2 dozen traders on our team every day for 2 years now. Almost 2 years, exactly. Trade a lot of different markets. So anyway, this is stuff we work on. But this last buy was actually really good. I didn't take any profit up here just because I actually wanted a bigger position. And so I didn't want to trim any of this, and kind of looking back, probably should have even if it wasn't as big as a position I wanted, there was some opportunity to take some off up here, especially into this double top, triple top. You could even call it a quadruple top up here. 5. But I'm still bullish. The market's holding the bands, just like the overall market. We really don't want these lows from 22nd to be taken out, or this happens to be the spike low on OMG down here at 12. If you take that out, then there's actually room to fall back below 10, maybe even all the way back here to 6. So that's, to me, where the risk is. So we're just holding the core long. I haven't added to it. What I'd like to see from here is markets start making higher highs, because we're sitting through an intermediate term downtrend. It's the same as we've been sitting through for weeks on BTC and Ethereum. But this is your phase 2 lower high. Failed to make a higher high, always the first sign that maybe the market's going to change direction. You break a higher low here, but then the higher low at the bands, just like you had the lower highs here, back at the bands is what really defined that trend. It's what's defining this uptrend longer term. So we've had these intraday moves, down, but you really haven't closed below anything significant yet. This didn't feel good in here, but I mean, I'm long from back here, so anyhow, this is the intermediate term wedge that's kind of building. Overall market's doing the same thing, so we just got to watch these lows, guys, here at 12 and 14 for where the risk is, right? And then obviously we can take out these highs on the up above 18, 19, then it's going to start to look like the intermediate term will turn back up, and maybe we can actually retest highs from earlier in the month up around 25, 26. All right, guys, hope that helps.